When the US dollar starts to fall, I know a lot of people start to worry. But for savvy investors, it's actually a massive signal to pay attention, especially if you're into gold, silver, or Bitcoin. Let's break down what actually happens, and why these assets tend to shine when the dollar's in trouble. First up, gold. Classic safe haven. Gold is priced in dollars all over the world, so when the dollar weakens, you need more bucks to buy the same ounce of gold. That pushes the price up, simple math. But it's more than just numbers. A weaker dollar usually means the Fed is printing more money or slashing interest rates, which stirs up inflation fears. When people worry their cash is losing value, gold looks like a pretty sweet insurance policy. Plus, when the dollar dips, gold actually gets cheaper for buyers overseas, so global demand jumps too. Bottom line, falling dollar, gold gets a glow up. Now silver. It's not just gold junior, it's got its own thing going on. Silver acts as a monetary metal, so it moves with inflation fears just like gold. But it's also crucial for tech, solar panels, and electronics. So if the falling dollar is tied to stimulus or economic growth, silver can see a double boost. Here's the twist. Silver's market is way smaller than gold's, so the moves get amplified, both up and down. Don't be surprised if silver outpaces gold when inflation really kicks in. Let's talk Bitcoin, because this one's spicy. Bitcoin's story is a mashup. It's digital gold but also a risk asset. When the dollar slides, especially because of money printing or countries like BRICS moving away from the dollar, Bitcoin gets a turbocharge. People start to question the whole fiat money system, and suddenly, a decentralized, scarce asset looks a lot more appealing. But here's the nuance. Bitcoin can still get tossed around with stocks and broader risk assets, especially if the dollar's falling because of a crisis or recession. Plus, headlines on regulation or tech adoption can send it flying, or crashing, in a heartbeat. If I had to sum it up with a cheat sheet, gold usually rises as a safe haven and inflation shield. Silver rides the same wave, sometimes even higher, because it's powered by both monetary and industrial demand. And Bitcoin? It's got the highest potential upside, but also the wildest ride, tying together inflation fears, monetary policy, and the whole future of money debate. So when the dollar weakens, especially from printing or debt, these three assets tend to rally. If it's geopolitical shifts, Bitcoin and gold are the stars. And when inflation takes off, silver can surprise everyone. Stay sharp, keep learning, and remember, sometimes what looks like a threat to the dollar is actually an opportunity for your portfolio.